Roughly 60% of Americans own stocks, yet fewer than 1 in 5 feel confident knowing when to buy or sell. It's no wonder. Every market swing can stir up fear, doubt, and regret, emotions that lead many investors to making decisions they wish they hadn't. But what if technology could help change that? Today's guest has dedicated his career to building systems designed to do exactly that, combining data, behavioral science, and smart algorithms to help everyday investors make clearer, more confident decisions. We'll explore how technology and AI are reshaping the way people invest, and whether these tools can help you avoid emotional traps and move closer to your financial freedom number. Stay tuned. Welcome back to Escape the Clock, the show where we highlight strategies and approaches for achieving your personal financial freedom. I'm your host, Daniel C. Rogers. Today, we're talking about one of the hardest parts of financial independence, making investing decisions. If you've ever wondered when to buy, sell, or hold a stock, you are not alone. A recent Fidelity study found that the average investor underperforms the S&P 500 by more than 3% a year. And that's not because they're picking the wrong stocks, but because they bought and sold at the wrong times. Emotion, fear, overconfidence, it does drive many of our moves and can sabotage our long-term goals. My guest today has dedicated his career to solving that problem. Jaden Sterling is the founder and CEO of Sterling Stock Picker, an award-winning investing platform that's turning traditional stock picking on its head. After years working at firms like Merrill Lynch and Citigroup, Jaden walked away from Wall Street to build something different. It's a transparent, AI-powered tool that helps everyday people make smarter investing decisions by blending data, education, and real-world insight. Jaden, welcome to the podcast.
Thanks for having me, Daniel. Pleasure to be here.
Awesome. I looked through your app. It's really cool. I really love the approach you're doing because I think a lot of times when people are researching stocks, you can get a bit overwhelmed through the screeners and the reports and honestly, social media. There's almost too many people telling you what the next meme stock's going to be. But I would love to hear kind of how you got into this, especially because you've seen both sides. What was the catalyst that drove such a large shift from working at big firms to building something like this?
Yeah, it's a great question. When I was young, around 14, I had an epiphany. And have you ever had an epiphany where like time stands still?
Oh, for sure. Maybe too
Okay,
many times.
so had one of those experiences, time stood still, and I just knew some things very clearly. I didn't know if I knew it or I was told, but that's just, I felt it deep inside. And I felt that I would be teaching about money on stages around the world. I would be teaching people how to be empowered with money, not enslaved by it. And lastly, I was told that I would be teaching from personal experience, not from a book I read or course that I took. So, like you can imagine, right, at 14, your whole life purpose is downloaded to you, and I honored it. I went full on into studying finance at American University, and then after that, went to work on Wall Street for 10 years. And I learned a lot about money, but mostly from my wealthy clients. My clients who had and this was a lot of money back then in the early 1990s, where they had millions of dollars and they had it in like 5 or 6, maybe 7 stocks. So that really opened my eyes to the power of focused positions, outperforming the indexes. And, we were told working at the brokerage firm to diversify their portfolio. So that would mean selling these amazing companies like John Deere and IBM, these really big, phenomenal companies back then. And I did what I was told, but one day I woke up to the idea of, what if my clients had just kept those stocks and not bought this package product, this mutual fund or unit investment trust or CD or treasury bill or bond, like how much better would they have done? Way outperform the markets, in some cases by 30% over a 5-year period. And when I realized that, I thought, oh, geez, the reality is like if you want to build wealth, you got to be focused. You really have to look at focusing your assets in one, two, three, four, or five stocks. And so I did that during the decade of the 90s. I bought one stock. It happened to be our parent company at the time, Travelers Insurance. I didn't know it was going to triple. My 70,000 grew to $1 million, about 920,000 over a period of time, just literally 8 years. And I thought, wow, there's power in this philosophy. There's something to this. Now I added to the stock. I never took any money out, but it compounded very nicely. And so there's a few things that, really inspired me to create the software. And that was one of them. It was my experience knowing what a difference owning individual stocks can make for an investor, for families. I mean, for people who, really want to change their life situation and better themselves. So I started teaching this, again, following my path of teaching about money, helping people be empowered by it, not enslaved by it, and teaching what I know works. So I started a course, and I called it the Money Mentor program, and I mentored a lot of people around the world online. And one day, one of my students said, I love what you're teaching me. Could you make this into software? And I was like, well, I don't know. I'm not a software developer, but I said, let me see what I can do. And then shortly, about 6 months later, my one of my students came to me and he said, I was working on mindset with him, and he said, I've got a partner and we've got some time. We're developers. Do you have any projects that you're working on that you might need help with? I said, well, in fact, I do. I said, what I'm thinking is if we could help novice investors, like people who knew nothing about investing or about stocks, find winning stocks in 2 clicks or less, I think we'd really have something. And that's exactly what we set out to do every night, every weekend, or 3 nights a week, every weekend. For 18 months, we developed what is now the Sterling Stock Picker. And we beta tested it for another year after that. We didn't launch it until early 2000. So we took our time. We wanted to make sure that we really had something that was worthwhile for people because there's tons of software out there. What I've been told one of my superpowers is that I keep things I uncomplicate the complicated. And so that's been addressed in our software to make it super simple for people who are new, so they don't get scared away, they don't get intimidated by it.
Yeah, definitely want to get really into the software and how, like, why you made the decisions you did and how you kind of score things and make your recommendations. I think that's really fascinating. Before that, though, I want to touch on something that you already touched on, which was some of the maybe emotional decision making that kind of holds people back. And I have to say, like, I've had a lot of financial advisors through the year. And of course, you get oversaturated in whatever companies you work for, right? Usually because there's equity programs where you're automatically buying in. And I think a lot of people, they don't really think of stock market investing, at least the people I'm talking to, a lot of folks. And they're just like, oh, well, I guess I'm invested because my company invested me, but I don't know what to do. Tell me what to buy. And so I see that camp, and then I see the camp who are really hands-on, right? They're like research, research, research. And sometimes I think in that camp, maybe there's a like too much information can lead to maybe not great outcomes. I would love to hear a little bit more about when you were maybe at Wall Street, how you were seeing that change in mindset. Because I have to tell you, if I had followed the advice of the advisors I had, I would have lost a significant amount of money diversifying away from some of my best gaining stocks.
Yeah, I'll bet. I mean, you're absolutely right. I mean, Warren Buffett said it best, diversification is the tax that people pay when they don't know what they're doing. So you're absolutely right. There's power in focus. Like for business owners listening to this, if we told you, hey, we're going to give you 100 new products to start selling tomorrow, and I mean, you'd be like, what? What are you saying? Like, you'd be overwhelmed. And every mutual fund has anywhere from 100 to 150. Some have 200 stocks in them. There's no way that they can be managed to the point where people are going to get decent returns. And frankly, Wall Street isn't built to give people decent returns. It's built to make money off of investors, not for investors. So once you start waking up and realizing a few of these truths that exist out there, it hopefully can propel our listeners to go, hey, I want to figure this out. So where I recommend starting is because you're absolutely right. Fear can take over, but so can analysis paralysis. Like you've got both of these heavy emotions on either side that can stop someone from putting money to work. So what I recommend is become a first class noticer. And what does that mean? It means like look around, like what's going on around you, what's happening. Like there was a year that Lululemon stock dropped 40% because they couldn't get their manufacturing figured out. They had like problems at the plant. This was not long ago. And it was around the holidays. It was early December, and my wife and I were in the mall, and we noticed the line out the door at Lululemon. And I said to her, "Look at that! Like that means revenue. Like let's start buying the stock. I know it's down 40%, but I think it's going to be really good." And she said, "I agree. That's a lot of people waiting in line to check out when it's circling around the mall." And so we did. The stock performed really, really well. I think it doubled that year within a short period of time. Like it was such a great move. So that's the first thing is start to become a noticer. And now we are full on in a world of technocracy and start to notice like the trends and what's happening and to not be afraid by them because that can be overwhelming too. You can go, well, there's so many semiconductor stocks, like which ones do I buy? And that's where we step in. That's where our analysis of companies really helps investors. We have a simple rating system, 1 to 5 stars. 5 stars is a strong buy. And then we also track our performance for our 5 stars, and we believe in full transparency. So we actually post our returns on our website, front page of the last 30 days and then the last year for our returns. And they far exceed the indexes from each sector and each industry. So, and I'm talking by a factor of like 60% is the performance. Like anything, try not to complicate it. That would be my suggestion for most folks. Keep this simple. We're just talking money. We're talking an asset, something that can really make a difference for you, a tool of leverage, and stocks give the leverage to money. That's the key. And you may not know what risk level you can take. Well, that's step number one through our platform is through a simple questionnaire, we determine your ability to take risk and what that looks like. And then once the software knows what level of risk you can handle, those are the stocks it shows you at that same risk level. So you'll never be investing in something that you're totally uncomfortable investing in.
Yeah, it's really interesting because I remember working like with one financial advisor at one broker, and they would always recommend their brokers funds, and then I go to a different broker, and they never would recommend those funds. They'd always recommend their funds, and
Yes.
so everyone has their own kind of bias and why they're telling you to do what you do. So it makes a lot of sense. I can see the gap you're filling here. And so, can you tell me a little bit more about when you decided to make the app itself, right? To create this tool to help people from the things you learned? Why did you decide to make the model the way you did? And especially someone who doesn't really want to become an expert trader, how is it helping them learn how to invest better and beat at least inflation or hopefully that 10% return that we see in the market every year?
Yeah, it's a great question. So the key for what we're doing in our analysis is we mostly analyze individual companies. I know there's ETFs out there. We don't show any mutual funds on our software because it doesn't really work with investing. Like you said, the reason they're showing their proprietary funds is because they're paid more. The broker gets more of a commission to sell their proprietary over an outside mutual fund. Hey, there are some great people who are brokers. Like I'm still friends with people to this day who are in the industry and are stockbrokers, selling funds and what have you. But the system internally is the issue. So that's what we steer away from is not showing these packaged products and showing investors individual companies. We've already done the analysis on the financials, the fundamentals, the technical indicators, and now we added a new metric called financial health because in this type of market, we have to know that companies are trading below their intrinsic value, that they've actually got positive cash flow on a monthly basis, that less debt than they have in terms of revenue. So all of this is taken into consideration, analyzed, evaluated, and then given a ranking for. So You have to rely on something, whether it's our software or, someone's gut feeling about a company. We put the investor in the driver's seat of building a portfolio for themselves that they can manage and handle and feel comfortable owning these companies.
I love that you make it easy, put the information in front of people, because ultimately what you're trying to decide is, do I need to buy into something? Do I need to sell it? Or am I just holding, right? And Warren Buffett talks a lot about how to do well investing and looking at market cap, fundamentals, principles for growth, really values that a company should have, which makes them a good longer term investment. Do you have all of those things kind of in the algorithm? And also, I would love to know how much speculation comes into play for your recommendations, like the buzz of the day where you people feel that a stock may go. Do you consider all those types of signals?
Actually, we don't. We only focus on the financials, the fundamentals, the technical indicators in financial health. We can't let mainstream sway our opinions on companies. We're looking under the hood for how healthy a company is. We're not into chasing meme stocks or anything else. Not that there's anything wrong with that. Some of these are rocking, but the volatility that exists on the upside will exist on the downside. So as quickly as a stock can go up, it can go down. And, I mean, look, right now we're in the middle of earnings season. We've got Meta down $80 today, over 11% move for Meta. That's a big move for a big, big company. But on the flip side, we also have a company like Nvidia tipped over the 5 trillion market cap. And you just kind of go, what the heck? Like these valuations, are unheard of. I'll tell you a funny story. When I first started in the business in 1990, we would celebrate when 100 million shares traded hands in the market. Like it was a big deal. It's like, all right, pop the champagne. People are figuring out this stock thing. And as you know now, like 100 million shares trades in one company can trade in an hour. Like it's incredible the difference in the equity markets over the last 40 years. So we have an area in our software called Most Mentions. It combs all the social media sites, and a stock that is in the news or mentioned highly favorable, will post it, for people to see if they're interested in that. But that in no way impacts our algorithms in terms of our buy, sell, or hold recommendations.
There's a Morningstar report that said 71% of investors said that they would trust investing more overall if it could see why the recommendations are being made. Because there's a
Mhm.
lot of recommendations. I mean, you can listen to people all day long and say, "We'll tell you what you should buy." I would love to hear a little bit more about the transparency of what you built. How much are you teaching versus just recommending?
So I do want to speak to that because you're absolutely right. The reason that there's that high of number and recommendations is because they're compensated to recommend certain stocks. Like that's how the industry is set up. We are not. We do not take any compensation to recommend any companies or any sectors. We are fully transparent in that. And so this is a pure organic look at a company and all their fundamentals and financials and things of that nature. So I just want to speak to that because you raised such a good point. I mean, there are stocks being pushed out there and people are confused. They're like, wait a second, why should I be buying this? And a lot of times it's being pushed so that the insiders can liquidate, sell their shares, and then the investors left holding the bag. It just creates a really messy thing. So that's such a valid point, very important point that you talked about. And what was the other part of the question on that?
And more about the teaching part of it. Using the tool, is it helping not just feel good about the recommendation, but how much are you learning through the software?
So we value education and not just investing, but around mindset as well. Like I wrote a book on mindset called The Alchemy of True Success. And so I'm a big believer. I've seen it work in my life as well. So we've incorporated that into our platform. We have over 100 videos embedded in the platform, describing different metrics, what it means, how it relates to the stock, what an investor should be looking for. And every week I'm in there live streaming on Mondays to our subscribers to share with them, what's going on in the market, what I'm currently buying, why I'm buying it, what looks interesting. So I'm always trying to educate. And on top of that, we created an entire separate platform called Prosper. And that is where all of my courses that I've taught over the last 6 years live in terms of video forums as well as PDFs and things of that nature. So, huge believer in the education piece. And the education piece is interesting because it really gives someone a high degree of confidence with their investing. And life in general, investing as well, is a game of confidence. When you can really start to step up and tell yourself, hey, all right, I can figure this out, like anything. Like I'm just starting woodworking, man, and I'm so overwhelmed. I mean, there's so many different things to research and study in this field and tools to buy and things like that. And I just finally said to myself, you know what? It's going to be fine. Let's just start small. Let's build a birdhouse first, and then we'll go from there. So I think the same exists for investing, for people to really, start small, start with $1,000, start with what is, manageable for you, so that if everything goes south, if you wake up tomorrow and it's worth zero, which is highly unlikely, but if it did, you'd be okay.
I'd love to hear a little bit more about the AI side of what you're doing. Artificial intelligence, I think, is a lot of people are wondering how is that going to change how we make decisions? I guess my question though is more around how reliant should we be on AI intelligence versus learning and making these decisions more ourselves? So, can you talk a little bit more how AI is working in the product, and do you see any kind of risk there with and people becoming dependent on that, potentially falling into a trap of short-term trading?
It's super compelling, obviously. How we use it in our software, we call our AI Finley. So that's our learning tool for people to ask questions. But Finley is only as good as the input that we give it. And how it helps our investors in the platform is Finley knows all the stocks in a client's portfolio. It knows what's on your watch list, and you can ask it anything from, like, we've brought in things like, hey, I'm thinking about refinancing my mortgage. What should I be looking at? Like anything financial is embedded in our AI component. I think the key with that is for kind of like confirmation. Like if you're thinking, I really think that this AI is here to stay, there's some great opportunities, then you would ask Finley, our financial coach, like, which stocks do you recommend? Which stocks are poised to break out to the upside right now? Or a question like that. And the output from that is phenomenal, what it shows. And I found many winning stocks by asking questions like that. So, like any AI component, it's based on the quality of the input, the quality of the questions you're asking, and just use it as confirmation, right? Like, now we're starting to hear about AIs on purpose telling people things that aren't accurate. So it's going through this evolution, and it will continue to evolve. But I think we have to be cautious of it. I think that an investor can't fully turn a blind eye to their own assets and their own holdings and rely solely on AI. And, I know there's trading bots out there that will just trade for you. I don't know, maybe I'm too old school, like I've been in the market since literally 1990, and I'm not real certain about that. However, I will say we are in the process of creating a more of we're calling it the frequent trader program within our software that will allow some of our members to trade more frequently than, like, mostly we've been a kind of a buy and hold kind of platform for folks, but this will be a more frequent trading platform, and we are fully utilizing AI for the recommendations, but giving it very strict requirements for showing us a stock. So I think there's some things that can be really helpful with AI through investing. And, I will say one more thing. In this market, we utilize option strategies, and it's the basic, most risk-adverse strategies, which is selling covered calls. And it has been so profound for our clients. Like, we're getting on average a 0.5 to 1% return every week just from the covered call selling strategy. So just alone, we're clocking in at a 40% return for our members just by using the covered call writing. we do it out of the money so that if a stock is called away, there's a profit there built in for them. And it's been wildly successful. Like it's incredible what we've been able to achieve. Last year, our return was 75% for our clients with the combination of the two. The reason I bring that up is because you can also look at investing, like as a tool, but also to create another source of income, another way to bring in money. It really doesn't take a lot invested to get a decent, another 500, 1,000, 1,500 a month return from your investments just from the stocks that you're holding.
That's fascinating. I didn't know you were doing that. I'm a huge fan of selling covered calls, especially for a buy and hold portfolio,
Yeah.
because you can generate really amazing cash flow, especially for someone like me in an early retirement. That's been
Mhm.
a kind of a godsend. So I want to ask you, what do you see the future of the Sterling stock picker? I mean, as it's safe to say you don't see it as a AI powered robo advisor, maybe, but maybe not. How do you see the evolution of the product?
I see us incorporating more pieces into this frequent trader program where we're also in the middle of onboarding a solution where traders can go directly, log in directly to their trading accounts through the stock picker, whereas they couldn't do that now. They would go to the stock picker first before they log into their portfolios to do transactions. So they would find the stocks, realize what to buy, and then they'd go over. So now they'll direct connect into that into their options trading as well. So that's one thing that I see. Also, my vision for this platform is right now we have 3,000 members in the platform, and I see it growing to at least 5,000. At that point, we're probably going to trade on a tokenized exchange. And that's going to be an exciting part for, our members can get involved, but we also have investors who we raised capital with about 4 years ago. And I want to make sure that they more than double their investment with us. So we need an exit strategy that will do that for them. And that's kind of what I see. I mean, I'm not a traditional go to a bank or a brokerage firm and do, an underwriting with them. I didn't do that on our capital raise. I would rather put the money in hands of investors, people who really deserve it and need it, than another bank or a brokerage firm. So that's going to be our exit strategy as well as going with a tokenized exchange, a securitized exchange for our folks. So we just keep showing up every day and making the platform the best that we can. And that's been our main focus right now is creating this frequent trading program, which will be a kind of a separate thing for our platform if someone's interested in trading more frequently. And then, really continuing to advise on the option strategies.
That sounds very lucrative for many people who just want to get in and know how to build a portfolio and
Yeah.
hold stuff for returns, and then eventually, generate cash flow through options. That makes a lot of sense. Have you looked into alternative types of investments? So, like, what about crypto and commodities? Is that something you could see in the future?
We do show crypto on the site, and we do. The only analysis that we're able to do with crypto, though, is from the technical patterns and in the underlying crypto. So, because there's really no fundamentals there, right? It's just really tough to tough to make a recommendation or not on these things. So we do show that on a limited basis. I'm a big believer in holding gold and silver, the coins though, coinage. And I think that's going to be real important going forward. I've been pounding the table on gold and silver for the last 3 years, but mostly the beginning of this year, I told her just buy the coins. You don't need the bars, you don't need the paper stuff. Just buy physical gold and silver coins with the face amount on them. And that's going to be, I think, going to provide generational wealth for folks should the system change because we're on a cusp of a digital currency coming in and it's going to leave a lot of uncertainty in the equity markets. But I've always been guided that we will continue to have a stock market, but currency itself could very well change to be digitized. And, we'll see how that unfolds. That's going to be an interesting time for us to live through.
Thank you for that. I appreciate that.
Mhm.
One last question. There's a generational evolution happening. Younger people are more connected with technology and also getting more into investing. How do you see the future when it comes to these younger people getting involved? Do you think maybe there will only be a role to technology like this going forward? And are you kind of evolving what you're doing based on how you're seeing these users interacting with your product?
Yeah, it's a phenomenal question. And we have to continue to evolve in order to attract the younger users. Most of our users on our platform are people in their mid 40s and up. So we recognize that it has to be more change. And we're addressing that with the frequent trader program because the younger investors want a very quick return fast. Their attention span is small and it's short, and they've been used to with crypto these big returns. And it's just something that exists. It's a thing because, as you mentioned, with this generational, with inheritance coming in to the younger generation, it's going to be coming from the baby boomers, and this younger group starts inheriting money. I think that they're going to look for alternatives to stocks because stocks are just a little too slow for them, with their returns. But technology isn't. And technology is the thing that's really paving the way and leading the march toward a higher equity market. And no matter what age, we have to have folks invested in AI and technology.
Thank you so much, Jaden, for being here with us today. How can listeners connect with you and explore more about what you're doing at Sterling Stock Picker?
Yeah, thanks, Daniel. Thanks for asking that. And sterlingstockpicker.com. So Sterling like sterling silver. Stockpicker.com is where we're located. And there's a free 30-day trial for anyone who's interested in trying it out. And then after that, we priced it very affordably. We think so. Like I think it's 20 or 29 or $30 a month or so to get into the platform. And yeah, that's the main thing. So feel free to reach out to me. Like I mentioned, I'm in the platform every week doing live streams, but also we have a chat forum in the platform. So I'm in there 3 or 4 times a week answering questions from folks, investors who are looking to have, certain stock picks like, hey, would you look at this stock or what is your thought on this company? I'm happy to answer those questions for sure.
Fantastic. And that'll all be in the show notes as well. Well, thank you again, Jaden, for joining us and telling us more about the role technology can play with investing.
Thanks for having me, Daniel. I enjoyed it. Oh, who's that little guy? There we go.
Sorry, this is our new foster pup.
Nice.
His name's Cabo. He needs attention sometimes.
He's awesome. Good.
These past 3 weeks, I've focused on investing. First, by breaking down how the stock market actually works, then by exploring how to build a portfolio that can sustain financial freedom, and now by diving into how technology is reshaping how we use those tools effectively. If you're new to investing, I encourage you to go back and listen to this series again. There's a lot packed in here, and understanding these strategies could be the difference between feeling lost in the market and feeling in control of your financial future. In my conversation with Jaden Sterling, I was fascinated by his take on the role technology plays in modern investing. On one hand, he sees a future where advanced applications powered by artificial intelligence might replace the traditional investment advisor altogether. Once AI models reach a level of general intelligence that allows them to understand context, behavior, and client goals like a seasoned advisor, they could offer truly personalized financial guidance at scale. But Jaden also sees technology from another angle, not as a replacement, but as an assistant, a tool that helps advisors and investors alike learn faster, analyze more data, and make more confident, informed decisions. It's clear to me now that technology has already left a massive imprint on stock investing. The sheer speed and scale of trades that happen every minute is staggering. According to NASDAQ data, over 60 million trades occur on US exchanges every day. And that's before accounting for the hundreds of billions of algorithmic trades handled by AI-driven systems. Now, with artificial intelligence able to process real-time data, global events, and sentiment faster than any human ever could, investors can identify patterns and opportunities that would have taken experts hours or maybe even days to find. Those who embrace these tools are likely to stay ahead, potentially trailblazing a new era where technology helps distribute wealth more equitably, not just to the elite, but to anyone who learns how to use it. In many ways, technology could become the great wealth equalizer. Younger generations already sense that. According to a 2024 Fidelity survey, 7 in 10 Gen Z investors use mobile apps or robo-advisors to manage their portfolios. And many are already comfortable making small, frequent trades, even in emerging areas like cryptocurrency. Jaden also pointed out that as currencies continue to move towards digital forms, stock market investing will persist, only evolving. And whenever the financial landscape shifts, those who adapt early are the ones best positioned to rise with the tide. Still, I'll admit, this is where I feel some inner conflict, because as powerful as this technology is, there's a risk that investing could become too easy, too automated, too gamified. A world where the average investor might make dozens or even hundreds of trades a day, chasing dopamine hits instead of building real wealth. That disconnect where money becomes just pixels could dull our awareness of the stakes. That's why it's so important that technology brings balance, not just speed and automation, but education. Apps and platforms that teach, that contextualize, that guide investors towards smart, sustainable habits. That's what I love about the Sterling Stock Picker and what it's doing with its AI assistant, Finley, and the educational streams that Jaden hosts. It's not just about using technology, it's about mastering it. History shows that innovations like this can transform how everyday investors build wealth. When ETFs first arrived, they opened the door for affordable diversification across entire sectors. Robo-advisors made automatic rebalancing and dollar cost averaging effortless. And target date funds, now a standard part of most 401ks, those quietly introduced millions of people to glide path investing, helping them de-risk over time without even realizing they were doing it. So I can't help but wonder if AI-powered investing tools are the next evolution in that lineage, the next great leap that empowers everyday investors to apply proven strategies more effectively, more confidently, and more consistently. If tools like Sterling Stock Picker succeed, they won't just make investing easier. They'll help people use advanced strategies that once required years of experience or a financial degree. Imagine being able to identify strong dividend opportunities, sell covered calls, or optimize your tax strategy, all guided by real-time AI that works alongside you, not above you. If that happens, we may see more people not only hitting their financial freedom numbers, but creating true income streams from their portfolios, earning cash flow without having to sell their shares until they're ready. And maybe then, more of us can ride the market's ups and downs with calm and clarity, understanding that volatility isn't an enemy, it's just movement, and we can all reach financial independence without needing a Wall Street background. As always, I want to hear from you. What are your strategies for making confident investing decisions? Do you use AI, robo-advisors, or trading apps to support your decisions? Or do you prefer the hands-on approach? Thanks so much for listening. Best of luck making strong stock trades and escaping the clock. I'll see you next time. Thanks for tuning in to this episode. Remember, while I'm not yet a financial planner, I am getting my degree in wealth management. You should take anything you've heard here as tips and advice to making your plan. To learn more, visit www.escapetheclock.com. There, you can find the book, resources, including the planner, and you can even schedule time with me. Please remember to like and subscribe so you don't miss an episode. Thanks for tuning in, and I'll catch you next time.